to the economy. You may have heard this past week, for the first time in 4 years, the Federal Reserve finally slashed its fund rate by 50 basis points. Now, the most aggressive Fed move sent mortgage rates down to their lowest point since early 2023. Heather Long is an opinions columnist with the Washington Post, has been writing about the economy for years right now. Heather joins us live. Good to see you, my friend. So people hear about this. What is it actually going to mean to their lives, you know, and these folks that we've talked to over the years that are struggling with paying bills?
It's a huge relief. I mean, you just said it's the first rate cut that we've seen in several years, and we've finally seen gas prices go down. We've seen those egg prices go down, and now we are finally starting to see these mortgage rates come back down. Some people are already starting to see a mortgage rate in the 5s, and that's going to continue to drop. And we've seen
our economy is strong overall.
All right, we got some sound bleeding in there for some reason. Heather, this cut was bigger than a lot of people thought it was going to be. What's behind that? Because we had spent the better part of 2024 talking about this, you know, like it was some slow-moving train coming down the tracks. And then when it finally arrived, it was a bigger cut than anticipated. Was the Fed making up for the, you know, the cuts that they didn't do throughout the year?
I think you're right a little bit. Obviously, we normally don't see this big 50 basis point cut unless we're in some sort of recession or scary situation. And that's not where we are right now. In this case, the Fed was trying to say, look, the economy is in a very solid place and we want to keep it that way. So it was more like an insurance policy. What I think was really going on, Tom, is that they probably should have cut 25 basis points in July and then 25 basis points now. But the Fed Chair, Jerome Powell, he simply didn't have the votes in July. And some people have already admitted they weren't ready to cut in July. So that's why it was a bit of a makeup cut here in September.
Yeah, it surprised a lot of people. So what will this mean for inflation overall now as we head into the latter half of this year?
Well, certainly the inflation data keeps coming in really in a good path, looking like we're getting closer and closer to 2%. The only major area that's still really pesky, if you will, is the housing. Housing prices, rent prices in particular, people are still feeling that crunch. But a lot of data is showing us that there's some relief there too. I think we all keep an eye on, do refinancings pick up? Do we start to see more activity in the real estate sector? Also keep an eye on the manufacturing and industrial sector. That's been pretty depressed in the past several months. We'd love to see that pick up with these lower rates too.
Yeah, there's a whole host of things that could be affected by this. You know, one question, you know, that already, not to be greedy about this, Heather, people are having is, are we done? I mean, could we see more cuts this year?
That was the biggest news, Tom, from Wednesday. Once everybody got over that initial shock, is they also put out some estimates of where they think interest rates will go. And you're right, by the end of the year, they predict interest rates will be down to 4.4%. That's a huge drop, almost 5.5% this summer. And by the end of next year, they're predicting could be down to 3.4%. So you're right, there is more relief on the way, not just in the real estate sector, but I worry a lot about all these people with credit card debt. We've got record credit card debt right now. This is real relief for a lot of those folks, and certainly anybody who wants to start a business or buy a car. Those loan rates should be coming down too. So it could be a very hot holiday season if you're looking to buy.
Yeah, I know. We know there was a Fed commissioner who was very concerned about this and actually wanted to move against a cut this size. Given the fact of the credit card debt that you just brought up, will there be markers that they're looking for? Are there benchmarks that we need to meet, or will they just spring this on us when they decide?
Well, they have these scheduled meetings. So the next meeting actually occurs 2 days after Election Day. So I think they were trying to also give themselves, they always say we're not political, but no, anybody's logical doesn't want to be in a really tough position 2 days after Election Day with the economy. They also have a final meeting in December. Right. So so that's where they'll be looking to cut. And certainly you're right, making sure that that inflation continues to come down.
Heather Long from the Washington Post joining us this morning. Heather, always a pleasure. Good to see you.
Thanks, Tom.
All right.